Hello and welcome back, or welcome for the first time. My name is Patrick. I am here to share some really exciting information with you if you're into stock trading or if you're thinking of getting started. Well, I've decided to share what I've learned over the last 15 years with you. Some cool information. If you stick around, I think you'll find it very, very interesting and very useful. Anywho, if you've been to the channel before, you know what this is. This is outlook of my entire portfolio. This is my portfolio manager. It's got every single position that I currently have on, and in the future I'll be expanding. I want to do maybe up to 30 positions on this, but so far I've got 20 currently in. There are 17, as you can tell. There's 3 empty spots here. But let's get started with the macro and what's been happening lately with Russian Ukraine invasion and inflation and all these things combined. I mean, the market is not dictated by the war. It may be momentarily, but most of all, the most important factor here is the inflation. The Fed saying that it will start raising rates as early as this month, even. Um, and then there is the yield curve, which has been nothing but down. It's definitely flattening. Let's maybe get started with that. Let's go straight into the yield curve. This is an updated chart of the yield curve that I have, and a steepening curve would be a line going up, and a flattening curve would be a line going down. Where do I get this information? I get this information from the bond yields. What you do is you take the 10-year, you minus the 2-year, and then you take the 10-year and you minus the 3-month, and then you take the spread of the two, which is essentially this number here divided by this number gives you the spread. And I track it for the year. Since the beginning of the year, this is what's been happening. Now, when this thing hits zero, and it has been going down fairly quickly. Now, this is the top of the range here in January, but if you go down, like if you follow this number, it will drop down to 0.15 in January. It started with a 0.54, so it's clearly on a downward trajectory. This here is the spread between the two, the 10-year minus 2-year and the 10-year minus 3-month. And the two are actually shown here. This is the 10-year, this is the 3-month. This is the more immediate term, which you can use for as entry signals. But this is the underlier, the 10-year, the mother of it all. And as you can tell, it's been heading on a downward slope for quite some time already. The yield spread is flattening. We're piling into defensives, just like I have. I've actually made that decision going back a couple of weeks ago. I restructured the whole portfolio, dropped everything, closed off anything. I was actually set up cyclical, long cyclicals and short defensives. In a situation like we have right now, and I've taken some losses there, you have to reverse and you have to go the opposite direction. There are no good things coming. Our economy is so screwed right now that I don't see this reversing, and we've been on a downward spiral for about 3 months already, as you can tell. We are in the bull market. You'll notice I've updated the chart a little bit, and it's got a little bit more information here. Currently, we are down 12, almost and a half percent since the last cycle high. Now the market would be at minus 20. We're currently at 12.3. This is going to be the bear market here. Now, I've set up I've set up defensively, and that's how I'm going to continue going forward, at least for the next quarter, based on what I'm seeing here. I mean, it would have to change, a lot would have to change for me to change my mind on that at this point in time, but I don't see any good things coming. So get your gold. I have. What has the VIX been doing? VIX is still sitting above 30. Very volatile, very unpredictable at this point in time. Not advised to be traded by anybody who doesn't know what they're doing. I'm fully hedged, or at least almost fully hedged always. And then I go with the trends, which are pointing downwards right now, thanks to the inflation and the Fed confirming that they'll be tightening right into a slowing of the economy. We are slowing down now. We're off our peaks, and the ISM has confirmed that we are slowing down yet again. And moving forward, I don't see anything good things coming with this Russian war and all that stuff. So S&P, the yield has improved a lot since last time I've redesigned it. I wanted to see more. Uh, when you see stuff like this happening in the spread over here in the gray, that's when a lot of the instability happens. And at the end of it all, we had COVID starting right about here. So don't believe everything you see on TV. This was happening way before. Anywho, let's go to USD Canadian. That's been holding steady, actually. Nothing really happening there. Canadian dollars pegged to the oil, and there will be some fluctuations there because it's currently becoming uncorrelated to the oil. We're not producing that much of it anymore, and so we're unpegging ourselves from that. Here's your gold chart, steady incline. I don't see this slowing down either. Silver, very much the same story. Copper spiked and it went back down. We have our oil, which is currently at $109 a barrel. It went up all the way to 123 this week, which was scary. Quickly appreciating. I mean, this is all blamed for Russia. This is inflation, people. Anywho, our US dollar position, it's created so far $27 of profit. Our Warby Parker short created so far 91 and 46, and this is the spread for that. I've actually changed this up a little bit as well. I've added the S&P 500 and the ratio, so you can see what's going on. My battery's dying now. So pretty much my curve, sorry, my ratio curve and the S&P 500 curve, which is obviously opposite of each other. Even though it's going down, I'm actually making money. As long as that red goes up, I'm making more money. I'm going to go through the rest of the positions. Utilities sector, long utilities, currently minus $2. Short technology sector, up $13. These are ETFs. Here's my gold ETF, up almost $60. And the QQQ, Invesco QQQ Trust, I'm short that, $25 there. EDV, Vanguard Extended Duration Treasury, that's another ETF, currently $5.50. And then there's the XRT retail, which I'm sitting at 13.23. TELUS Corporation, I'm long that, and I'm currently sitting on $30. And then the XLY ETF, sorry, it's sitting at $60. CWK Junk, J&K, we have Cushman and Wakefield. I've held on to that since my original. I wasn't convinced that this one was going to be done with. It's got a lot of volatility, so I'm giving it a little bit more time. Obviously, this is already 12.5% down. I should be closing it, but I won't. I know this is going to reverse, kind of. I'm just basing my decision on that. And then there's the junk bonds, high yield bonds, which are creating $26 so far. And we have Venom, which is the energy partners, oil and stuff like that, which has been down 36. And you'll notice like, oh, minus 24%. That's because my Clover didn't work out so well. But that's an option that it's a put that I bought. I paid 70 cents on the dollar for that. And I really don't care. I'm just going to let this one all the way and see what happens. Maybe it will go down. Maybe it'll keep on climbing. Who cares? HYG put, this is high yield corporate bond. That's been doing quite well. I bought it for $1.77. It's at $3.60 right now, creating $180 in profit, which is great. 20-year Treasury bond. You'll notice if you go back to the yields, I'm long that because that's obviously going down. It starts off here at the beginning of the year 205, and we're currently sitting at 245. That's an upward trend. So I'm long that TLT, and I'm short KRE, which is the regional banking ETF. And yeah, that's the portfolio. My battery on my headset is about to die, so I'm just gonna let you go here. Just a quick update. It's been pretty bad lately. for the markets. Obviously, S&P 500 has lost around 12% already. I'm actually seeing that 12.3% since the high, and since January 12th, it's lost 11.3%. I've actually lost since January 12th, I've lost 2%. So I'm doing better than the market, but I'm not making money. I actually lost some. As you can see, my equities value is 1766 here. I have gone down, but not that much. So there was a mistake being cyclical for too long, but now that we're defensive, those numbers will be changing in my favor, I'm sure. And if not, then we'll pause, regroup, and come back in a couple of weeks. Nothing scary here. Just continue. Thank you very much for joining me. Short 10-minute video today, just an update of what happened. A couple of new things to see, like this yield curve. I'm very proud of this. I've updated this. It's much better now. And it shows me one thing. This is probably the most important thing you can look at. When this inverts, meaning going to zero and beyond, bad things are coming, people. And it's a very, very, very quick decline. Like, not a recession, we're thinking depression. That's what I'm thinking anyway. And crossing my fingers that it won't happen. Anyways, peace. Thank you very much for joining me again for the third time, and see you on the next one. I'll try to upload a little bit more. I've been having issues with my health, and as such, I've been away from all of this, but here and there I'll upload and keep you posted. And then we'll go through this spreadsheet again. If you don't know what you're looking at, go back to my previous videos. Those will show you exactly what this is. I go step by step through this entire process here. You're looking at my portfolio just the way it is currently, the way it is right now. You're looking at everything, and in order to read this, yes, I can make another video on this later on. Maybe the next one will be like that, but you have to go back to my older videos and watch them for yourself, because I won't be repeating myself, and then sometimes I will be repeating myself. But if you really want to get behind how this chart here works, go watch those videos, okay? They're all there. Play the playlist or whatever you have to do. Just watch it all and you'll see a lot more will reveal itself. And you'll also see how my process works and what do I do, why I do things a certain way, why do I hedge absolutely everything except for this HYG here. I still don't have a long on that, but that's an option. So I know I'm not going to lose more than I've invested on this one in order for me to, like, I put in $177, and currently the return is 100%. If I see this at 300%, this number right here, I will close this and call it a nice profit right there. It's a 3-to-1. It's beautiful. But currently, that's my biggest trade. So let's end with that, and we'll see you on the next one. Thank you very much.